Good morning, good afternoon, and of course, good evening, traders from across the globe. Welcome to my 2570th edition of Short-Term Trading Live with Oscar Carboni. Traders, we got some great charts to show you in this video, and let's get involved. Remember, that's a risky game trading. I don't care if you're trading crypto, if you're not trading crypto, if you're trading fiat, if you're trading anything out there. It's really risky, so never trade without stops. Put them in first, okay? Stuff on the board. So this is for trading on Cinco de Mayo. Yeah, baby, it's gonna be a party tomorrow. You know what? I feel drunk just talking about it already. So we're gonna have a blast tomorrow. We actually have a pretty large-sized party planned for tomorrow, but more about that in another day after the party. So, video 2570 coming at you on Cinco de Mayo, May 5th, 2023, and it's about trading markets, and let's go. The last thing we looked at in the video I put out yesterday or the day before was the double top in NASDAQ, and let me say, that double top in NASDAQ sure was telling, wasn't it? Oh my God, the double top worked perfectly. Banks are failing, the sky is falling. You see what's going on, right? The Dow just violated an average. On the downside, it always holds, or usually holds. There's no always in this business. And it usually holds. And gold is at a triple top on the chart. It's the highest price it's ever been, ever. Sounds pretty darn scary out there all of a sudden, doesn't it? Well, on the other end of that, I'm going to show you a chart that will prove to you it's not all that scary out there. It's a moment in time. Let's take this one day at a time. I will try to calm you down by the end of this chart segment. So, the charts I'm about to show you, of course, will involve the OMNI, S&P, NASDAQ, Russell type of charts there. We've got a fantastic gold chart on the board here, or at least there'll be one on the board shortly. That triple top we've got to go look at. We'll explain how they work. And the Dow breaking the average it usually holds is a little bit troublesome for me, but hey, one day at a time. We'll take a short, almost against my better judgment. The S&P's been down 4 days in a row. Is it allowed to go down 5 days in a row religiously, if you will, from Wall Street, right? Don't they come in after the fourth day and send it up? So I don't know. It's a little scary wanting to be short for a fifth day in a row. But until the OMNI flips, I'm not going to argue with it. We'll see what happens about selling major rallies. We'll see where that goes for trading on Friday. So anyway, yes, banks, they are failing. These little banks are failing. But you know, if you just think about the way things have progressed over time, you know, remember there used to be a place called Pergaments or Rickles, or you used to go to an Ace Hardware store or something like that, or a paint store, Martin Paints. Remember those stores used to exist? And then Home Depot showed up and see you later, all that stuff. And now there's a couple of big stores that do it, right? And you know, the banking industry, it's going to be the same way. The internet is the same way. When the internet started in 94, by 98, there were so many companies, you don't know who to get an ISP from, you don't know where to go, it went berserk. Look at it now. There's a handful of major players, and that's about it. Everybody else, you know, little stuff. So the banking system is going to go that way. There are a lot of small banks out there that have been basically set up over the last 5-7 years on really, really low interest rates. They didn't really prepare for what started to happen, was the raising of the rates, and they're likely going to need to be absorbed by bigger banks. So yes, some small banks are going to fail, and eventually, you know, there'll be 5-7 large banks and nothing else, but in time, like every other industry as it matures. So that's a natural progression that's taking place because the banks that were set up with low interest rates are now looking at 5, 6, 7% at some point. It's tough for them, right? No good, they'll be absorbed. So the sky is falling for them. I don't know that it's going to be the end of the world for the markets. Anyway, that average that got violated in the Dow is kind of important, so we'll look at that. I hope it comes back tomorrow and holds, which would be ugly for us being short, but I hope it comes back and holds tomorrow. I'll show you a chart on that. Traders, I've got an OmniCamp coming up very, very shortly. I'm accepting applications. These are OmniCamp 101s. I've got one happening the first weekend of June, And I'll take 2 people, but that's it, no more. So if someone else wants to join us, that's fine. But we're holding this to a group of 2. If you'd like to join me for this OMNI camp in June, I will bring you into Vegas and kidnap you for a few days until I teach you my OMNI platform and test you and make sure you know it well, and then send you home with a brand new laptop and connection to me for the next 10 years so we know you do well when you go home. If that sounds appealing to you, get in touch with me, 702-629-4755, or simply go to omnibootcamp.com. I can't speak anymore. I'm done here. Go to omnibootcamp.com, fill out your Omni Bootcamp application, and I will call you back from there. Remember, it's happening right away. It's the beginning of June, so you got to hurry up. All right, traders, that's about it. I will see you at livewithoscar.com. With no further ado, let's go look at some charts. Traders, NASDAQ daily bar chart. Showed you this and said, look, we are at a double top, and we know when we see a double top, we sell a double top. This is where it was, and this is what happened. How about that? Fantastic, right? Want to see more of that? Join me at livewithoscar.com in my free live trading room. Unbelievable, right? We look at stuff like this all the time. So that worked out well. It's come down. The one thing that's scary is, 1, 2, 3, 4. We don't get a lot of days down like that. Not in a row, not lately. So is there going to be 5? A little bit challenging there. The YM. If you look at the YM, the mini Dow futures, from this long resistance line that I've been showing you in every video, how we hit it again, had some distribution every time we've gotten to it. More distribution or profit taking took place at that line again. But here's where it starts to differ. See this blue average? See the hold, holds again on this day. But when it breaks, look at the rectangle right there. You get massive movement. All right, well, here we are. Hold. 4 times. 1, 2, 3, 4. Here we are. 1, 2, 3, 4, and we broke. Scary, right? So the next thing that should happen, is that. Poof, we should head down a little bit. So that's what's supposed to happen based on repetition of, a repetition of patterns. What we look at is a pattern that repeats. If you see one that repeats, you go with it until it stops repeating. And a repetitive pattern repeats until it stops repeating, right? That's the purpose of a repetitive pattern. So that's what you have here. And until it stops repeating, that could be what's coming next, kids. I know Omni wants us to be short one more day. And the Dow Jones Industrials, the bigger one, same sort of thing, but it held the average even better and reacted even more violently when it got to it. Well, same thing. So that's where we stand as of the close on Thursday, looking at Cinco de Mayo, staring it in the face under that average. I'd like to see it end up back here for the better of the markets, but we'll be short if that happens, so let's hope not. All right, so then you know what all of that is happening, why all of that is happening on those charts. It's all being brought to you by the very same thing that you see right here. Bond futures. As bond futures drop, interest rates rise. As interest rates rise, it puts pressure on companies. Their stock lowers. The price of the stock market starts to have trouble. So it's basically this that makes that happen. When bonds go down, rates go up. So, at least we've had a little bit of upward movement here. We'd like to see it go up more, and that would help the stock market. But overall, you see the arrow, this is just in a down spiral. And until that stops, there's going to be a lot of pressure on the stock market. Now that you've seen all of that, and everything that I showed you was scary, let's go back and take a look at reality. Reality is getting away from those daily charts, which is looking at the trees, and go out, get in a helicopter, bird's eye view, and look at the forest. The forest says, whenever you hit the 200 bar moving average on the NASDAQ weekly bar, you have a pretty big rally. I can go back and show you this all the way to 2008. It happens every time. We came back, we hit the 200 bar moving average, tested it. And since then, we have been enjoying a rally. This is a bull flag. And nothing looks scary on that chart at all. It looks perfectly in line with what I've been showing you since February 7th when we talked about the bottom being in. It looks like we've been right so far. Nothing goes straight up, but now we're doing longer term thinking, not for Friday. Longer term past that, this weekly chart doesn't look bad at all, kids. So don't lose your skirts here. Watch out, everybody. Don't let your underwear get in a bunch on this one. It hasn't fallen apart yet. And then there's one last thing to look at, and that is the gold. Look at this triple top in gold. Now, what's interesting about that is this is the highest price gold has ever been, ever in the history of mankind. You're looking at the spot right now. We are all witnesses to the highest price gold has ever been. We're all witnessing history right now. So what happens at a triple top? In most cases, a triple top, you'll read in books that it's supposed to be the top of the market. And it tells you the market's over. I don't view triple tops that way. If it does not get through on this push, it will back down and head back up again, and in not too distant future, take out that triple top. That is what we expect, but you're looking at a weekly bar. Every one of these bars represents 5 full days of trading. It takes a lot of time. 1, 2, 3, 4, 5, 6, 7. It could take weeks and weeks for this to happen because it's a weekly chart. But that is what happens in most cases when you hit a triple top. You will get a pullback and a recovery through it at some point. I wanted to show you that. Please don't be so worried about the market yet. I showed you that NASDAQ chart right on the weekly. That's not scary, so don't get scared. Let's just trade what's in front of our eyes and trade this one day at a time. All right, traders, now, I'll see you at livewithoscar.com. And remember, stay calm. How do you do that? Say this to yourselves over and over. Are you with me? 1, 2, 3. Stops are in. Emotions are out. Thank you so much for tuning in. I will see you at livewithoscar.com.